Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. My name is Pushpendra Mehta, and my guest for today is Craig Jeffery, Managing Partner at Strategic Treasurer. Welcome to the Open Treasury podcast, Craig.
It's good to be here, Push.
Wonderful. This week, we are focusing on 8 stories that cover 5 themes, namely treasury technology, recession, acquisitions, ESG ratings, and finally, India's mega plan to steal factories from China. You can read these articles and also research content more deeply by visiting CTMfile.com or by following the links in our show notes. Our first story for today is about the launch of Bank of America's biometric sign-in for CashPro. Bank of America is enabling QR sign-in for CashPro to ease the organization's processes for accessing their payments, cash management, and trade finance operations. The new option aims to eliminate the need to manually enter account information. Clients utilizing the bank's CashPro system can expect to log on to the website with their mobile device by scanning a QR code and using biometrics via the CashPro app. Craig, what do you think about Bank of America's CashPro modernizing the sign-in experience with biometrics?
I think we're seeing that across the board, not just in banking, but in pretty much every industry. Your thumbprint on your phone or face recognition on your computer. We're seeing this, easier way of accessing things. And I don't know if this signals the end of the password, but it certainly, continues to point to its decline. We need multiple points of security, something that only you have, your face, your fingerprint, maybe something as well. And so this is just, an ongoing development. So, Tom Durkin's group there continues to leverage new technology. These banking portals are huge and growing, and CashPro is a very significant one as, part of $1 trillion bank with many, many customers. This is a natural progression. And so, we expect them to continue to develop easy methods of sign on. Same thing with the other, let's just say $1 trillion banks, as well as the super regional ones. That'll continue to roll out through the whole ecosystem till that's something we would just expect to be there. Just like we started seeing the multi-factor authentication with the token, that moved to, multi-factor authentication primarily with the phone or a soft token or an authentication app. This is, easy and secure access is where everyone's going. So this is on the road.
Terrific. The next story pertains to DBS partnering with FinLync, a privately held global fintech company, to transform corporate finance and treasury offices by aggregating global banking APIs to deliver embedded real-time payments and cash management. Craig, will the DBS FinLync plug-and-play APIs rollout make it simpler and more efficient for corporates to digitalize their corporate treasury functions and also integrate banking services?
Yeah, what's interesting here, Push, is the ongoing movement towards more APIs, the more robust APIs that exist now. So FinLync has long been on this path, and banks and other organizations that have to connect are taking advantage of these easier connection methods, easier to develop and expand. And so this is a good thing, and it's part of a process. You'll see it with FinLync. You'll see it with other API first entities building out this type of connectivity. So it's part of the transformation. Sometimes we think transformations like this take place over a couple of years. It takes place over, more than a decade, but we're seeing it's continue to expand rapidly. And I know we've talked about some of these developments from time to time on the Open Treasury podcast. So this is good news on a similar and familiar path.
A welcome move indeed. Moving forward to the third story for today, which is about HSBC and Oracle NetSuite have unveiled the only solution that embeds banking services into a cloud enterprise resource planning system to help organizations address time-consuming and labor-intensive accounts payable processes. It is expected that the launch of this automated payment service with NetSuite will make payment processing simpler, faster, and more accurate. Craig, what do you make of HSBC teaming up with Oracle for embedded banking as a service deployed into a globally recognized cloud ERP system?
The process of moving from discrete systems where people key something in or act in a different way and move from one environment to another is slowly changing, right? We're focused more push on an end-to-end view. And so banks are doing this idea of an embedded finance, embedded treasury, embedded banking. There's certain places where you're in an ERP, you need to make a payment. Why would you want to go out to a banking system? Why not be able to perform that transaction there? And so a deeper integration between banking, between accounting systems, between treasury platforms is a natural progression to make that smooth and seamless. And so embedded is really another word for more and more seamless, and so it takes out a disconnected process, a disconnected step, a point of handoff, a point of failure, a point of inefficiency, and embeds those together. So we see more and more embedded services in different, platforms, accounting systems, as well as a more robust ERP systems. So this, HSBC's crowing a little bit about this. And it makes sense. And other banks are active in this endeavor as well. You need to be where your companies are playing. And so that's on your own platform and it's embedded in other systems where people do business.
Moving away from embedded banking into global recession, the fourth story is about the head of the World Trade Organization, or WTO, adding her voice to a growing chorus of observers who see the global economy heading into a recession. Craig, security, climate, energy, and rising food prices are the four shocks that are hitting countries at the same time. In such a scenario, do you think central banks don't really have too much of a choice but to continue monitoring, tightening, and increase interest rates to reduce or mitigate the effects of recession?
Well, I think those are the tools they have for monitoring and for acting. So yes, that seems to tie in. I guess the global pessimism, either slowing or global recession. We've seen that in some of our discussion last week. I think it was 96% of economists thought there would be a worldwide recession, a decline in, worldwide domestic product. So we saw that, and there's a lot of these headwinds from some of the ones you mentioned: the ongoing war, the fuel issue, employment issues, central banks trying to tamp down inflation before it becomes runaway, and so they're raising rates. All that contributes to a few factors that heighten the slowdown. Right, rising interest rates make it a little more costly to borrow funds, make companies a little less expansionary. It's a little more costly to do business, so they pull back to their core. They get a little more efficient, and then they can expand again. So it's part of the cycle. You've known me the last at least 5 or 6 Open Treasury podcasts. I've been fairly pessimistic on things, and this maybe is not as bleak as some of them, but there's a lot of weaknesses around the globe. We have a lot to deal with, and the World Trade Organization, the heads of the different central banks, all have a lot of work to do, and they're still playing catch up, and hopefully they'll be able to adapt quickly.
Hope so. Moving forward to our next story, which is about the Swedish private equity firm EQT agreeing to purchase Billtrust, a New Jersey-based company reportedly building a gateway to automate the invoice-to-cash process for US $1.7 billion in an all-cash transaction. Besides providing shareholders an immediate and substantial cash value with a compelling premium, Craig, what do you think are the benefits of this acquisition from a B2B payments and accounts receivable perspective?
Well, I want to comment more from a deal situation than from an acquisition of particular functionality around the cash conversion cycle, though there is a lot of activity around the cash conversion cycle that is worth noting. And maybe I will say a few things about that as well. Billtrust being acquired and moving private. Billtrust is a pretty sizable organization. If you look at, what happened not too long ago, Bottom Line Technologies was taken private by Thoma Brava. And so the activity that's occurred is there's a lot of this moving private. What does that do? Where's the value? Well, I think, there's this ongoing new developments happening and ongoing, consolidation. That's kind of the natural trend, maybe sometimes a little bit more consolidation. From the private equity standpoint or from private ownership standpoint, there's a window in terms of the focus. It usually tends to be 3 or 4 years to 7 years tends to be private equity's windows of making sure that they can increase the value of a firm and then they spin it off and move on to the next transactions by leveraging what they do well and the capital they can put to play. And they don't have to worry. They don't worry about quarter to quarter. They worry about change over a 3 to 7 year window, maybe 10 years, maybe most of them fall in the 5 to 7 year range. This is part of what's happening. There's quite a bit of private equity and they have an ability to not worry about the quarterly performance, but worry about the yearly and multi-year performance. So I think with what we're seeing there is we're certainly entering a period of more end-to-end look, more combining of technologies. And so this is in line with Billtrust is acquired, Bottom Line Technologies was acquired and taken private. And we saw things like Mellon be picked up by Coupa. There's a lot of work after you figure out what the deal is to make it work and really pay off. This is a period where we're seeing private equity scoop up some significant firms that were, either public or just very significant in their industry, billion-plus capitalization firms.
Our next story is about the France-based SocGen having signed an agreement to acquire a majority stake in the fintech PayExpert, allowing the bank to broaden its offering for retail and online merchants. Craig, what do you make of this majority stake purchase?
Yeah, so a lot of these major trillion-dollar banks are looking to continue to expand and sweeten their offerings. And so they're constantly looking at technology and making investments where they see it makes sense. Now, this falls outside of our normal focus on the corporate to corporate domain. But this idea of them expanding through this acquisition in PayExpert to help, retail and online merchants is, not unusual, given the size, scope, and breadth of SocGen and the footprint. So, hey, you partner where it makes sense and you acquire where it's more appropriate, right? You might partner early to gain insight and be more of a distribution channel and leverage that. And if the success looks bigger, you do more investment. So a lot of banks, investment arms make a significant number of investments, minority stake investments, and then some of them raise it. I'll be really interested in watching how this develops over time to see if it provides all the payoff they're hoping it to.
From acquisitions to ESG, the 7th story for today is about BNY Mellon, the corporate brand of the Bank of New York Mellon, adding ESG ratings to its securities lending platform. The platform will allow clients to quickly and easily analyze how their portfolio, the collateral they receive, and the investments they make align to their ESG goals and values. Do you think the ESG rating announcement is a sign that the demand for increased transparency in connection with ESG investing is growing for organizations across the globe?
Yeah, Push. So as we look at, an increasing number of companies follow and emphasize, environmental, social, or governance, or maybe all of them, they're looking for investments that help them to meet their portfolio targets. This simplifies the process, and you don't have to have, even 30% of the buyers, for example, to request or require that in their acquisitions or investment behavior for it to make sense for those who are distributing funds or, in this case, doing sec lending to offer that type of information. And once it's available, those that use it, and those that don't. But with even a moderate minority, not even a significant minority of firms, that it pushes over so that work can be done, and those that focus on that can take advantage of that type of data. And so I think we're reaching that point where there's more and more, and it's different from region to region. We've talked about emphasis in environmental in Europe and governance in the U.S. and different areas in Asia Pacific, but there's growing trends, ongoing slow trends, but trends nonetheless over time, and we're tripping over these little hurdle rates where you see these other programs like what BNY has put together, making it easier for those who focus on ESG or one of the three legs of that stool.
Can I ask you a follow-up question? You mentioned the three legs in a stool. Do you think that all the three legs, all the three elements of ESG for a score to work or for the ESG ratings to work across security lending platform, all three of them have to be treated equally? An organization could have the E aspect, the environmental aspect. They treat that more important, and the record there may be great. But when it comes to S and G, society and governance, that may be found missing. So do you think it requires all three to be, treated at par for ESG ratings for an organization for that to work well?
No, I don't. I mean, whether someone's focused on governance or social or environmental areas, certain investments, certain assets won't follow all of those well. But an organization may have a policy of focusing on the full mix. So I don't think they have to be treated evenly. But the fact that those are areas that show up in relatively close percentages indicates that there's going to be attention, if we're going to be rating these, rate all of those. And then there's certainly regional differences. Like I mentioned, North America and US more on the governance side, the environmental side, heavier in Europe, particularly in like the UK. So we see those regional differences, and those matter, based on the overall size of the economic market, buyers, lenders, et cetera.
Moving from ESG investing to the eighth story for today, which revolves around the 100 trillion rupee or a US $1.2 trillion mega project that can help India achieve its dream of becoming a $20 trillion economy by 2040 and strengthen its challenge to China, a major global powerhouse, which is nearing its first anniversary. Last year, India announced a mega project called PM Gati Shakti, which in their national language, Hindi, stands for Strength of Speed. The project is about creating a digital platform that combines 16 ministries and provides multimodal connectivity infrastructure to various economic zones. The portal will offer investors and companies a one-step solution for design of projects, seamless approvals, and easier estimation of costs. The aim of the project is to fast-track projects without time and cost overrun so that global companies choose India as their manufacturing center over China. Apple has just announced plans to begin manufacturing the iPhone 14 in India, while Samsung opened the world's largest mobile phone factory in the country in 2018. Craig, you have visited India in the past. From your perception of both a visitor as well as from a finance and treasury perspective, when you hear of India's $1.2 trillion plan, do you think India will be able to steal factories from China, or do you think China is far ahead in its manufacturing prowess and it will take a lot of time and effort for India to catch up?
Yeah, just some background on this before I answer that particular question, which is a really good one. I mean, 1.2 trillion US, that's about a third of the entire Indian economy, their GDP in a particular year. I think they're about a $3 trillion economy. I should have looked it up and written it down, but that's and this is being spent over many, many, many years. So to grow from, let's say, around 3 trillion to 20 trillion, around a six-fold increase, that would get them on par with where China is today, a little bit ahead of where China is today by 2040, right? So US is about 25 trillion, a little bit north of that. China's about 20. India's around 3 trillion. Huge population. So it doesn't take much in terms of much growth to start really steamrolling an engine like India, if I can refer to a country as an engine. In terms of will they be stealing factories or not, there's certainly an issue of diversification of where companies source. We've long seen shared service centers, centers of excellence, IT servicing happen in India. Very, very prolific. I mean, educated workforce for doing that activity, a certain facility with English to be able to support that activity. And that's been a big growth engine for India. So that's one aspect. And so some of their historical services have been different than what China has been focused on. But the need for more sources will drive that. And there's also not a zero-sum game of economic production. I think we sort of think about that. Do they have to steal? Do they have to do whatever? And I know you're using the frame, just take share because they're more efficient. I think there's a lot of room for growth and sourcing, and India should be able to take advantage of that. They've got a number of things that they have to work through. You mentioned being a visitor. This plan is meant to provide the type of infrastructure that supports good business, good transportation, good telecommunication, clean air, clean water, all those things that support a country doing better, providing an environment that's healthy for businesses as well as individuals, of course. And so there's certainly a room for India to grow very, very rapidly, given its size, its position. And, part of this is something you always see, like someone paves a road. This can happen in every country. They pave a road. It looks beautiful. And then a week later, someone's putting in a pipe somewhere. It's like, once you tear that up, you fix stuff, right? You rip out the wall in your house, or you have to run electrical work into the room. You put the extra outlets in when you have the wall open. You don't wait and do it a week later, having all that overhead. And so part of this is, let's plan and be thoughtful about that, which is what India is looking at. I think these are good signs about being more efficient. And to the extent that, parts of India are, very, non-developed. I've been in places where there's a crew of 20 or 30 people hand mixing cement, working on a road, doing, I don't know how many square meters, of road a day. Very, very manually intensive. Well, that changes, as you use tools, you allow scaling, but you have to be smart. You can't just continue to rip stuff up and waste stuff. And we see that in every country, but every time you see that, you say, well, this is not right. Why couldn't we have coordinated better? Now we have more information and more technology. And so as they build, there may be that opportunity, just like with, cell phone services. People jumped, certain countries, third world and second world countries skipped over having all these landlines and wire run on poles underground to, broad Wi-Fi or cellular service that allowed people to completely skip hurdles. So there may be some opportunities there. I mean, obviously you have to have pipes for water. You still have to run some type of wires for certain activity. I think this is a really interesting development to see how this will unfold over the years. Do you have a good set of laws that support the rule of law consistency, which is essential for businesses, freedom, and then the infrastructure that supports that? We see countries that have those types of things, coupled with, work ethic and educated workforce. When all those things are coupled together, that can make a significant difference in terms of growth. It allows you to expand out of third world to second world to first world. India is a juxtaposition of one area to another. It can be very, very different.
You made a great point. Finally, I would like to wrap up this conversation by seeking your opinion on your choice for the biggest or most important story of the past week and why.
I'm going to go with a theme rather than a particular story push. And here's why. We've had QR codes for a while, right? Those have been around for a while. And I don't know if I just recognized at this time, Bank of America is using QR codes. Place I go to all the time is like, hey, sign in with the QR code. Like all of a sudden that started, in the last so many months. And so we have the Bank of America story. I think HSBC put it. We're used to that. We've seen that in some of these other areas where, in some of these articles that we're talking about on CTMfile, where we're using QR codes to simplify the approach, simplify activities, gathering information, or enacting a transaction. And so that's sort of the specific of the theme of ease of access, ease of secure access. There's a reason why that's showing up in many places, because that represents ease of access and doing business in a secure manner. So that'll be my theme for the week. Push, how about you? Did you pick a particular story or a theme?
I did actually, and I thought that the Bank of America story would be my story of the week, particularly because, you mentioned ease of access, ease of secure access, and, anytime there is biometrics adoption by any major entity, now here it's corporate, but I think at some point in time, if it moves in a simple and secure manner from corporate to retail, you pretty much have this entire, at the end, every decision maker is also an individual. So while you have people in corporate treasury, they're also individuals who have to take care of their retail banking needs or consumer banking needs. So I think in that sense, the Bank of America story and biometrics adoption with QR codes that would be the reason where I see a greater adoption of this. And at some point in time, this would take care of the privacy concerns that people have. So that would be my story of the week. And I couldn't concur more with you on this aspect. But thank you, Craig, for all your discerning comments and insightful analysis. We would also like to thank our CTMfile audience for joining us in this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.